Welcome to Winning with Money. My name's Dan Kmeyer, and I'm a financial and small business coach here at S2S Coaching. Let's get started. First, let's make sure this video is really for you. This was really geared for one of two kinds of people. This is for anyone who's never had any training on how to manage money. Maybe your parents didn't teach you anything, you didn't learn anything in school that was actionable. Well, this is definitely for you. Also, for anyone who's maybe tried it the way they learned and they've experienced some challenges, maybe some failures and struggles with managing the money that the way they've learned, and maybe they're ready to try something else, something that has a proven track record with other folks. If that fits you, you are in the right place. The reason I put this project together was mainly to give hope and to kind of share my experience, strength, and hope with anyone that's wanting to get control of their finances. And I want to do that by sharing what I wish I had known when I had gotten started. I wish people had taught me so that I could have avoided a lot of challenges and a lot of setbacks that I had in my earlier years. And then also at the end, I wanted to be able to offer additional assistance for anyone who thinks they could really use it. I'm happy to help. Let me start by sharing some of my story so that you can see if you can really relate and so you know where I'm coming from with all this. First of all, it's important for me to point out that I didn't grow up with any real training with money or whatnot. Both my parents were separated when I was little. I grew up with just my mom. She didn't really have time to teach me anything about money. And so we always kind of lived right around that poverty line. And I just wanted to share that because I wanted to make it clear that I started from nothing. I started from ground zero, didn't have a family that taught me how to manage money or anything like that. So I had to learn all of this on my journey. And so I want to use that as encouragement so that you know that it can be the same for you. You don't have to come from a family that was doing really well and that was winning with money to be able to do it yourself. You really can start from anywhere. Okay. I had screwed up my finances so bad that back in 2003, I actually went through debt reduction services, which is pretty much the same thing as like a Chapter 13 bankruptcy, where you reorganize all your debt. I was up to my eyeballs. I had done it wrong for many years and finally learned my lesson and didn't know how to get out from under it. So I put up my hands and surrendered and said, you know what, somebody needs to help me do this. And so I spent years paying down all that debt. It took me many years after that, after I reorganized it all, to finally get it all paid off. I went through the Financial Peace University program quite a few years ago, and that kind of gave me a nice structured program to follow. I'm that kind of person that likes a step-by-step solution to things. I'm kind of an engineer mindset by trade. And so it really made a lot of sense and clicked, and we followed that program. And that helped us get completely debt-free, including our home, so we don't even have a mortgage. And just by following those steps and investing and doing the things that I'm going to be talking about in the rest of this video. So I do know that it works. If I can do it, I know anybody else can because I'm nothing special. I didn't start with anything. So I know you can too. Because I liked the Financial Peace program so much, I ended up becoming a coordinator myself. So for the last quite a few years now, I've been facilitating financial peace classes. And so that's allowed me to walk through the struggles of a lot of other people, a lot of other participants as well. So not only do I have the benefit of my own journey, but I also get to get into the trenches with other folks and walk through some of their challenges with them. I've learned a lot that way. I ended up becoming a Ramsey certified financial coach as well, so that I can work with individuals who go through the FPU class individually, one-on-one. If after they go through the class, they still need additional assistance, I have the ability to do that and have all the training and stuff that the Financial Peace and Dave Ramsey's programs provide. And I also volunteer as a financial coach at one of the local nonprofits in my area, and I've been doing that for quite a few years now. And so once again, it's been another wonderful opportunity for me to walk through some of the challenges and the journeys with other people as well. So I've been able to have the wealth of all that experience poured into me, and it's been my incredible privilege to be able to help other people walk through their challenges as well. And it's definitely a great passion of my life. So that's where I'm coming from. Let's kind of start taking a look at what we can do together to get through whatever challenges we face. When I was first getting started, I didn't have a whole lot of hope because I didn't really know anybody in my life who had really won with money. And early on my journey, someone came alongside me and told me that really anyone can win with money, and it's all relative. It doesn't matter how much you make. It only matters how much you keep. And that gave me a lot of hope. And so I always want to share that with people so they understand. I mean, over my course of coaching people, I've had families that make $40,000 a year doing better than families that made $200,000 a year, meaning the folks making $40,000 were less broke than the people making $200,000. It's all relative. It only matters how much you spend. If you're not keeping anything, you're just broke at a higher level, depending on how much you make. So no matter where you are at, understand that it does not matter. It only matters how much you keep, and that is just a discipline thing. And that's what we're going to be talking about in the slides going forward. So let's take a look at an overview of what I've learned that it takes to win with money. Now, this is just an overview. We're going to dig into each of these in the following slides. Okay, so I'm just going to briefly cover what we're going to be talking about. The most important thing to do is to spend less than you make. And I know that sounds really simple, but it's actually far more difficult than it sounds, especially in our current culture where everything's 90 days, same as cash. And you can just put it on a credit card and have it today. So it's our own human nature that works against us, where we can just have whatever we want now, and then our future self is the one who has to pay more for it later. Okay, so that's the first thing that we're going to end up looking at. The way we do it is by holding ourselves accountable, by tracking the spending that we do, and we use a financial statement, and I'll cover more about that when we get to that. We're going to have emergency fund and sinking funds. We'll talk about what those are. The second main thing that people who win with money do is that they minimize their risk by avoiding debt and using insurance as well. Debt is something that we're so used to in our particular culture. We don't perceive the inherent risk that comes with it. And we'll talk about what risk is. But the rule of thumb for people who win with money is that they only borrow on things that go up in value, like a property, that kind of stuff. Okay, so we'll dive into that a little bit later. But our third thing that we do is that we invest for the future. We have to learn how to invest and what that means and what that takes, and understand that there are different asset classes and there's risk involved with investments as well. So let's dive into each one of those individually and we'll unpack them. But first, understand that 78% of us, that's 8 out of 10, of everybody around you is living paycheck to paycheck. And maybe that's you. Maybe you're one of the 8. So even though what I just mentioned was really simple to do and doesn't take a whole lot, we are not taught this. We're not taught it in school. Chances are our families didn't teach us any of that. And as a result of that, 8 out of 10 of us are being taken advantage of by banks and companies that know how to market to people where things are really easy to get. Okay? And as a result, that's why we live paycheck to paycheck. We spend everything that we make. If we missed 2 paychecks, we're basically bankrupt. Okay? And we're trying to overcome that. So now we're going to unpack each of those items to give you a better understanding of what habits are necessary to be able to overcome this. Okay, one of the biggest challenges that we have as a culture, especially here in America, is that we tend to spend as much as we make and sometimes even more than we make when we put things on credit cards and whatnot. So what are some really simple strategies that you can use to stop that from happening? Well, the most important thing to do to just get started is to start tracking your spending. Now, I use a spreadsheet. I just use a Google sheet, and I categorize my expenses by like groceries, dining out, fuel for vehicles, other like clothing, that kind of stuff. And it adds it all up so that way I at least know how much I'm spending each month on certain categories of expenses. And then I take it a step further and say, okay, over the last 3 to 6 months, I spent X number of dollars cumulatively on these categories, so I can set that as my boundary. And that way, if I know what the maximum amount I'm supposed to spend in those categories is, as I input new purchases, I can say, oh, I'm coming really close to my monthly limit, so I need to stop eating out, or I need to stop buying clothes, or whatever it is. It's all about holding yourself accountable. Whether you do that with a notepad, spreadsheet, whatever you're comfortable with, keep it on track of it on your phone, it doesn't matter. The idea is just to hold yourself accountable so that you don't spend as much. The next most important thing to do is utilize a financial statement. Now, a financial statement is made up of two parts. It's basically a budget, also called an income statement. And the second part is called a balance sheet. And that's where you keep track of all of your assets and liabilities. Now, I'm not going to go into that much detail on that. I do have a document that gives you instructions on how to create your first financial statement, and I'll have that linked in the description of the video below. Next, you always want to maintain an emergency fund. An emergency fund is like an insurance policy that you fund yourself. What you do is you keep about 3 to 6 months worth of your expenses. So if your monthly expenses come up to about $2,000 a month, you want to have at least $6,000, if not $12,000, just sitting in a savings account. And that's to handle things like a car breaking down, if you own a home, if your furnace breaks down, things like that. These are all things that you used to use credit cards to pay for and end up paying way more for it because you're paying interest and whatnot. But if we can just have some cash set aside, you just write a check and take care of whatever the emergency as it arises, and you don't end up paying interest on it. So that's a way to stay out of the red as well. We want to use sinking funds for any large expenses that you know are going to happen. For example, maybe you know the roof on your house is going to need to be replaced in 5 years, and you know that it's going to cost $5,000 to do it. I'm just putting these numbers out there to make the math simple. That makes it easy because if you have 5 years to do it, and you know it's $5,000, you need to set aside $1,000 a year in order to have the amount of cash necessary to pay for that when it needs to be done. That way you're not putting that on a credit card and making payments with interest over time. You save up slowly to pay for the expenses. The difference between an emergency fund and a sinking fund. Emergencies are things that you did not anticipate. A sinking fund is for things that you do anticipate, things you know are going to happen. You know you have to replace a car. You know you have to do a new roof every 20 years or whatever. Okay, so that's the difference between those. If you just implement those simple strategies, you'll definitely start getting ahead with your monthly finances. Another way that we control our spending, the amount of money going out of our household, is to learn how to manage risk and how debt influences it. Okay. Now, risk could be defined as the probability or the potential for a large expense happening, like a car accident, a health condition that requires hospitalization, those kind of things. Now, we want to try to avoid the huge impact financially that those events cause. And so we're going to do a couple different things. First, we want to make sure that we're avoiding debt as much as possible. People who win with money do not borrow money to pay for things called liabilities. A liability could be defined as anything that goes down in value or that actively costs you money on a regular basis. For example, your car that you use to commute every day or get around. You're making, if you're using debt, you're making payments on it. The car's value goes down. Everybody knows that. You're paying for insurance and maintenance and whatnot. Even if the car is paid for, you're still paying for insurance, fuel, maintenance, and whatnot. So it would be defined as a liability. Now, the exception to that rule would be if you're using it to drive for like Uber or something, and the amount of money you make from driving for Uber exceeds the amount of money it costs for you to operate the vehicle. So ideally, you would pay cash for it, drive for Uber. Let's say it makes you $1,000 a month. If the insurance, is like $150 a month and it costs $250 a month to put gas in it, you're still netting $600. So that would make it an asset at that point, and it's no longer considered a liability. But the idea is that you don't borrow on anything that costs you money, which is what most people do. They make consumer purchases. They're buying things like cars and four-wheelers and boats, all things that lose money, which just compounds the amount of money coming out of your pocket. Okay. So that's the first thing that people that win with money, that's what they consider when they think of debt. The only thing people like us will buy using debt would be like a rental property, and then knowing that the tenants are going to pay for the mortgage and then some, and we get to keep the difference. That's when it actually makes sense to use debt. Likewise, we're going to use insurance properly. Now, most people just hate insurance, think it's nothing but a negative thing, but it really does serve a good purpose, and that is to transfer risk So we're transferring the risk of some type of an event that could happen to us to another organization. And in return, we pay them premiums. For example, it's very wise to have life insurance so that in the event that you pass away, all of your expenses are paid for. Maybe it pays off your house, whatever. So whatever family members you have left over have enough money to take care of your estate after you're gone. The general rule of thumb is 10 times your annual income. So if you make $50,000 a year, you want to have $500,000 of life insurance, and you always, always, always want to buy term life insurance. Do not buy universal, whole life, any of those. Those are complete ripoffs by comparison to just term life insurance. Something that most people don't think about would be disability insurance. Most employers provide short-term disability, good for 90 days or something like that. But long-term disability insurance is also worth having. That way you're not at the whim of the government should you become disabled. You don't want to be dependent on whatever the government's willing to give you. If you have disability insurance, you can typically get about 65% of what your income was before you were disabled for the rest of your life, which augments your income, takes care of you much better than what the government typically offers. Long-term care insurance, if you're over the age of 60, you should seriously consider having long-term care insurance, because if you or your spouse gets like Alzheimer's and requires in-home care, it will bankrupt you. Absolutely. I mean, it happens so often, and it's definitely worth having, but not until you're over the age of 60, because the probability of it happening skyrockets after the age of 60. A personal umbrella policy is a type of liability insurance that's designed to protect you if you have like rental properties, or even if you're in a car accident, that kind of stuff. It's above and beyond your normal insurance. Generally speaking, it makes sense for anyone with a higher net worth. Once you're worth a certain amount of money, say like $500,000 or more, people tend to target you a bit more. You're a larger target for lawsuits because everyone's trying to win the lottery and think that that's the way to get rich. And so they look for people with deep pockets and try to sue them. Like maybe they'll rent a property from them and injure themselves and then try to sue the property owner to get a big cash settlement. So personal umbrella policies are designed to kind of help protect you against that. So something to consider if you have a high net worth. And always, always have property insurance. I have rental properties that are paid for, and we still will have insurance on them just in case, a hailstorm damages something, or if the tenant gets injured, whatnot. Always important to have property insurance regardless of whether it's paid for or not. Once you have a good handle on managing the money and your expenses and minimizing risk, it's time to turn your attention towards the future. And the only way to really take good care of your future self is to learn to invest. Invest for retirement, if you're going to pay for your kids' college, whatnot. Investing is really the best vehicle available to us. And the first thing that you need to understand is what to invest in. In order to do that, we have to understand what an asset is. An asset is the opposite of a liability. In the last slide, we talked about how a liability is anything that you own that goes down in value and takes money out of your pocket. Well, an asset's the exact opposite. It's something that you own or control, but it puts money in your pocket on a regular basis. And they come in different classes, different categories. Let's talk about each of them. The first one that most people are familiar with is paper assets. And that would be like stocks, bonds, mutual funds, the kind of things that you can just buy on the stock market. It's usually what we have in our 401ks or IRAs, that kind of stuff too. They're really convenient because you can buy them and sell them really quickly. But the downside is that you don't really have any control over any of them. You can't directly impact whether a stock price goes up or down directly because you don't own the company. You're just helping somebody else run their business, basically. So it has some advantages and disadvantages, which all of them do, honestly. So that's what paper assets are. Next, you have intellectual property. That would be like writing a book that you sell on Amazon. You get to get royalties from that. That would be an asset. It could be like a song that you write, and maybe it's on Amazon Music or something like that, and you get royalties every time it gets played. That's another example. Maybe you have a patent that you get royalties on. You invent something. All kinds of opportunities there in intellectual property. Real estate, which is my personal favorite. That would be like owning rental properties, not the house you live in, unless you're renting out half of it or something and it's making more money than it costs you to live in it. Like if you still have a mortgage on it, the renting out of the rooms on Airbnb or something would have to make more money every month than it costs you on your mortgage in order to be an asset. But if you just buy rental properties and the tenants are paying in rent more than what it costs you to own it with the mortgage, that would be an asset. And they tend to go up in value over time and whatnot. There's a lot of advantages. There's tax advantages as well. And then business is kind of the next big one that has a lot of potential for profits because you have direct control over it. You could start your own company from scratch with little to no money, and the possibilities are really endless. And it's totally up to you, and you have control over it. But it takes a lot of time and a lot of effort. So once again, there's a trade-off in every class of asset. And I do have a separate video actually available if you're considering starting your own company, or maybe you've tried in the past and had a hard time, want to try again. I encourage you to take a look at that video. I'll have it linked in the description as well. All right, let's take a moment to review what we discussed. And these are the strategies that I have discovered to really help people win with money, both in my life and in the people's lives that I've been able to coach over the years. The first most important thing to do is to make sure that more money is flowing in than out of your household. Basically, you need to think of your household like a business. So make sure all the money that's flowing in is managed properly by managing your expenses, keeping track of how you spend your money, utilizing a financial statement, and avoiding debt and risk by using insurance. Okay, that's the next big step. And then once we've taken care of our current situation, we can look to the future, and we do that by investing in assets. And I had talked about the different asset classes. If you can do these three strategies, you'll start making gains and moving forward with your financial situation. I'm very confident because that's exactly what we did in our lives. And it's the same strategies I've been applying in dozens of people that I've worked with over the years. And for everyone who actually does it, it has worked without exception. That does it for this video. If you have any questions or think you could use some one-on-one coaching, I'd be happy to help you. Feel free to reach out to me using the email address on the screen or visit my website, slaverytosuccess.com. Thanks again for joining me today, and I wish you the best of luck on your journey. And I look forward to hearing from you if you need some additional assistance.